We got Mr. Leo Lanza in the house. Leo, welcome. I didn't really know who you were until much earlier this year. I saw you bull posting about ETH a lot, and I'm as someone who's held ETH since late 2017, September 2017. I've gone through waves of being very excited about ETH and being very bullish on ETH, and I've also gone through periods where I'm disappointed in ETH, and I don't really understand what's happening with the price action. I have ideas of why adoption is kind of not coming to a screeching halt, but slowing down. However, over the last 3-4 months, we've started to see a lot of institutional intention focus on ETH, and we did a couple spaces earlier this year, and one of them was titled, "Does ETH Need a Michael Saylor?" And I genuinely believe that it does. At the time, I said, yeah, it really does. When you have someone like Michael Saylor, and now you have all these other guys spearheading the Bitcoin narrative, you really do need a suit like Tom Lee to jump up and say, hey, this ecosystem has value, this asset has value, and these are the reasons why it has value, and this is why Wall Street is deciding to build on it. So without further ado, I would love to hear a little bit more about you, your background, how you got into crypto, what you were doing before crypto, and then we can dive into why you are so incredibly bullish on Ethereum, because you've made some insane price predictions, which we'll get to a little bit later.
Cool. Yeah. So my background is just general investing. I got started in real estate. I was flipping houses. From there, I moved into trading. So I was doing a lot more trading. You still there?
I am still here. Told you I was having issues with my camera, and so now it's bugging. But just keep going. Want to hear about you, and I'll try to sort this out in the background.
Okay, no worries. So from there, I got into trading. I've always loved business economics and studying the markets. So I do a lot more reading than scrolling on TikTok and things. But I got involved in crypto. It would have been the time kind of blurs, but I want to say it was like 2016, 2017, around that time frame.
Okay. And what piqued your interest? What made you get involved in crypto?
So there's a concept in economics called creative destruction, which is where something old is replaced by something new. So think like whenever I was a kid, we would go out and we'd go to Blockbuster and we'd rent these DVDs, and that ended up getting replaced by streaming and Netflix and Redbox. And so I saw that same dynamic with Ethereum and smart contracts. I was like, oh, okay, this is going to literally replace everything. We can take the internet and we can tokenize stocks, we can tokenize ownership rights and everything, and put all of this back onto the Ethereum network. And so I saw it as an upgrade to the entire internet.
I see. I also saw that, but I also had issues with it early on because I didn't see a lot of tangible use cases. For me, Ethereum really clicked in 2019 when Uniswap launched. And then really in 2020, when we got DeFi summer, and I said, wow, okay, you have these financial instruments that were once available to people in TradFi, a select few, relatively speaking, and now it's been democratized.
Right.
I use borrowing and lending protocols quite often. Aave is my favorite, but we don't have to go on that tangent. Okay, so that's when Ethereum really clicked for me. When did it click for you exactly?
I don't know that I have an exact date or moment that comes to mind, other than whenever I had first heard about it and I was thinking about the potential of what it could become. I guess maybe layer twos was a really big aha moment for me, that and stablecoins. Yeah, but probably if I had to pick one, it would probably be layer twos.
Why layer twos?
So if you think about, I think that companies will want to build their own custom infrastructure. And we see that with websites, for example. We see that with YouTube. If you create a YouTube channel, you want to be able to customize it, create your own little brand. You see that with Amazon, how you have Amazon being the platform, and then people build their little e-commerce store. And I think what that does is it creates, I don't want to say vampire attack because it's not really what it is, but it's like, for example, like let's say that JP Morgan Chase were to build their own Ethereum layer 2, and they're instantly onboard their 80 million customer base. Well, you just onboarded JP Morgan's brand, their trust, their customers, everything onto Ethereum, because now they have this custom environment where they can meet regulatory compliance. They can customize their transaction fees to whatever they need them to be. It gives them a lot of control, and financial institutions really care about that. And so if you multiply that out with, like, Fidelity, Wells Fargo, all these big companies, and you end up with a scenario where you can onboard a whole lot of people very, very quickly, as opposed to if you had to bring them from knowing absolutely nothing about Ethereum or blockchain and try to onboard them into the Ethereum base layer. So I think it happens a lot more quickly, getting adoption.
I always get this question from people that aren't ETH maxis, and I'm curious to know how you would respond to why would a company, or why would JP Morgan, or why would Amazon spin up a layer 2 when they can have their own private layer 1, and they can decide how fast their throughput is, and yada yada yada.
So that has to do with network effects. And for example, if you build on YouTube, right? Let's say that, I have my channel, Leo Lanza, and someone goes onto YouTube to watch Mr. Beast's video. Well, because my video is on the same platform as Mr. Beast, it's possible that I get business and I get traffic from someone who's watching his video. And so that's the power of network effects. It's why people build on Amazon. If you go on there to buy a new fishing reel, maybe something else catches your eye from a completely different store, and you can very, very easily go over there, click add to cart, and it's at your door in 2 days. And I think we're going to see the same thing play out with layer 2s whenever we get interoperability, and it just feels like one chain. So JP Morgan Chase will benefit because they will have access to all the customers within the entire Ethereum ecosystem, as opposed to being in this closed-in, siloed system.
You use that word. I oftentimes hear that layer 2s result in siloed liquidity and fragmented liquidity, but what I envision is kind of what you just painted out. There are going to be different companies, and you have an awesome thread on this, by the way.
Thank you.
I can't pin it to the live video, but what we'll do is we'll retweet it. You have an awesome thread about this, and you talk about McDonald's and Amazon and Starbucks, and you say, well, Starbucks can have their own layer 2, and basically the end user is not going to know they're using the blockchain or a layer 2. They just are using the Starbucks app, and
Right.
they're earning royalty points. They can earn prizes, airdrops, a lot more that Starbucks can do by being on chain. And I get this argument a lot: fragmented liquidity, centralized VC-backed layer 2s. At the end of the day, though, I would imagine that a company like Starbucks would want to benefit from Ethereum's 10 years of no downtime, and also have some control over the ecosystem that they've spun up in the layer 2. So I think it's kind of a win-win when you look at it that way. What are your thoughts on layer 2s being parasitic?
I mean, I think it's kind of silly. I kind of use the analogy of, is Texas parasitic to the United States? It's part of the United States. It's kind of silly, if you look at like nature, nature scales modularly as well. So, it's nothing really that grows to the size of what Ethereum is going to become grows in this very monolithic structure, like building on a alt1 chain that doesn't allow layer twos, because you're taking away, like, I feel like chains that are built to be monolithic, they're built for extracting as much value as they can, and they are not built for the customer. They're not built for that end user, really. So what I mean by that is how layer twos allow the big customers like JP Morgan or Wells Fargo or Fidelity to go out and build their own customized infrastructure that they can tailor to their specific client base. And you just can't do that on these alternate chains.
So with fragmented liquidity, also, I see that I'm watching it kind of result. I'm watching the problem being solved in slow motion. If you think about just bridges, and I know that bridges have their criticisms, but if you think about just bridges in 2021
Yeah.
and how clunky they felt, you would bridge from one chain to another, and you sometimes have to wait multiple hours and just pray to God that your money didn't get sucked into some random contract.
Right.
And there were, you had massive bridge hacks like the Ronin bridge hack, you had the Harmony bridge hack, you had multi-chain. So there have been exploits, but over time, I've watched bridging between chains get simpler and simpler, right? You have Li-Fi and you have front ends like Jumper.exchange, which they're not paying me at all. It's something that I use and I think is quite efficient, but you can quite easily just jump from layer 2 to layer 2 now. And not just that, you can swap. So if I have Ethereum on base and I want Tether on Binance Smart Chain, or I want Tether on Optimism, I can literally just select Ethereum, select Tether on the other chain. You click on it, and within a few minutes at most, your money's there, and you can play in that new sandbox. So, and then you have front end interfaces like Rabby Wallet, which now automatically pick up which tokens are on your wallet, and so I see improved user interface. I see more kind of cooperation and interoperability between different ecosystems. And that's only in 3-4 years. So what do you think the future of kind of this Ethereum layer 1 that's supporting all these layer 2s looks like when we have interoperability that allows for mass adoption?
I think that the end user isn't going to know that they're on a layer 2. I think that they're just going to have a wallet address and they're going to just send, and it's just going to go wherever that other address is. I believe that's the synchronous composability, where if you have a blockchain A, blockchain B, or layer 2A, layer 2B, and you can just send it right across directly to the address, and there's just no issue. You don't even know that you have to bridge, or there's none of that. It's just automatic. And I think that's going to be a big deal, because like if you think about Amazon, like the way they try to optimize things is to reduce as much friction as possible, like having the one-click buy button. You don't have to go in and you don't have to fill out, okay, here's my address, 123 Main Street, here's my credit card information. It's just click and you're done. And so I think that's what we're going to see as people. It's like people like to complain because the end product isn't there, but the end product with the internet wasn't there. It didn't come out and it was just built out to where you could stream things. It was a process to build and to improve over time.
So tell me what's stopping Solana and other layer 1s from high throughput layer. I see you smiling there. High throughput layer 1s from just having a unified chain. Why do we need L2s? They're parasitic. They silo liquidity. We talked about how we just kind of explained why that's going to solve itself, and why in some cases it's actually beneficial to have separate, kind of not siloed, but separate L2s per company. But why can't Solana or Sui take the cake?
So I think I'm going to use Solana as an example, because I can use a real world example here. Robinhood recently came out and they said they're going to build their own layer 2 on Ethereum. They're going to, my understanding is they're going to clone Arbitrum and customize it how they want. So in order to understand why they did that, is you need to understand their business model. They are a payment for order flow broker, which basically means that they allow retail traders to have free trading. So it used to be back whenever I would trade, you'd have a trading fee like $7 or whatever it was. But they don't do that anymore for retail traders. And the problem is that if they built, from my understanding, their concern had to do with MEV exploits on Solana. And so that would, I guess the way that I could explain it is with MEV on blockchains, you reorder the blocks to extract value. With payment for order flow, you're reordering the trades to extract value. And so the concern there, and this is kind of me reading between the lines, is that if I'm Robinhood, why would I build on a blockchain that could extract my profits away whenever I could build on Ethereum and I won't be as susceptible to MEV exploits?
That, and they also, like you said, they control a lot of the money that comes in too. And
Right.
by that, I mean, L2s still take the majority of those fees for themselves, right? There's a little
Right.
bit, there's the post data, there's like the post data and the call data. There's stuff that's posted back on the layer one, which
Right.
in your example of 80 million users coming on board would still be bullish for Ethereum. Do you think that when you have enough L2s, even if they are taking most of the profit for themselves, it's going to create an environment where there are so many users that it doesn't matter if they're not on the L1. It is still, because of EIP 1559, creating a deflationary Ethereum indefinitely.
Right. Yeah, I would agree with that. The whole fee revenue thing, I don't really like in my mind, fees are great. People earn income, and fees are only necessary to the point that Ethereum is secure and you're incentivizing enough validators to secure the network. I don't think that it's valued based on, okay, there's this amount, there's this X amount of fees coming in. Here's a multiple. This is what it's worth. Um, and I think that's silly because, for one, it's a commodity, right? Commodities aren't valued based on revenues at all. So the way that Wall Street kind of values these types of new emerging assets is that they look at comparables. What is this comparable to at maturity? And so you're looking at in the order of tens of trillions of dollars on a global scale as the entire world's financial system rebuilds on it.
So you said that ETH could flip BTC. Am I correct?
I believe that's an inevitability. Yeah.
Wow. Oh, I would love for you to dive into why you think that's the case.
Well, if you think about, like, basically, if you break it down to the fundamentals, Bitcoin is just a scarce asset. It's basically like you take the Mona Lisa, you divide it up into 21 million pieces, and there can't be any more of that. That's great. And they've kind of memed this into existence that, it's going to go up forever. No asset goes up forever, right? It's essentially just an inflation hedge. And in my view, and I believe the proper view, is that as long as your investments are going up more than inflation, you don't really have to worry about inflation, right? So if your portfolio is going up 10% a year and inflation's 2%, okay, you're making 8%. Like, it doesn't matter. You don't have to keep all of your money in Bitcoin. So I think that narrative's kind of silly. It's like people right now, they don't keep all their wealth in gold, for example. The other thing, I'm losing my train of thought. Oh, stablecoins. One of the big use cases I've heard about Bitcoin is that, well, people in other countries where their native currency is unstable, well, they trade in Bitcoin, they do payments in Bitcoin. But the president has already said that he wants to increase US dollar dominance abroad. And you do that by filling that niche market of pumping the dollar into these countries that have an unstable currency, and now these people can trade in stablecoin US dollars. Well, now that's kind of gone for Bitcoin, right? So people aren't going to be trading and buying coffee with Bitcoin in these other countries if they can take something like the dollar, which is much more stable, even with that 2% inflation that it averages. So I think that kind of goes away. I think Bitcoin will always be here and it'll always have value, but I just think that the potential for Ethereum is so much more because of what can be built on top of it. We're talking about like rebuilding the entire, ownership rights for real estate, which is something like I want to say it's like 500 trillion or something globally of real estate wealth. So you're talking about like tokenizing those deeds to properties. You can tokenize all the stocks, all the equities, pretty much ownership rights of any asset in the world can be secured on the Ethereum blockchain. You can talk about like Forex. So the Forex market, it does, I want to say it's 7 trillion in volume a day. And so what is that, right? That's people trading currencies. And so what does that look like on Ethereum is it's just stable coins. It's having a Canadian stable coin. It's having a British pound stable coin. And so all that trading volume will eventually move on to Ethereum. And so I believe that Ethereum's value will come from society's dependence on the ecosystem. Whereas Bitcoin's value is, hey, just buy it. It's digital gold. Just buy it, hoard it, buy as much as you can, never sell your Bitcoin. And I think one narrative is a lot stronger and it provides a lot more value to the world than just this digital form of gold.
I hear this argument from Bitcoin, and by the way, I love Bitcoin, and Bitcoin is going to be the majority of my portfolio. Doesn't mean it's all of it. Bitcoin and ETH make up about 80% of my crypto portfolio, and I have other stuff as a leveraged bet on ETH, right? Chainlink or Arbitrum, whatever you want to hold if you think is going to outperform ETH. I hear this argument a lot that, okay, this stuff is all great, right? Stable coins, yes, they found product market fit. Yes, they're used globally and they give people access to the US dollar who otherwise would not have them. In fact, I would say that stable coins are currently at this moment solving a bigger problem than Bitcoin is globally. Now, with that said, I hear this argument a lot is, okay, that's all great, but why would I hold Ether, right? I can do all this stuff. It's this amazing sandbox, but why do I want to hold Ether? Why do I want to hold this asset? When the monetary policy isn't set in stone the way that Bitcoin's is, or when it can go from inflationary to deflationary. I want to hear your words.
Well, if you look at ultrasound, I believe it's ultrasound.money. I believe that's the address. It shows that since the merge, Ethereum has actually had less issuance than Bitcoin. And Ethereum actually has an issuance cap, meaning I want to say that if 100% of the supply is staked, its maximum issuance per year is 1.52%, but we're not anywhere near that right now. So I want to say it's 0.9% is average inflation. I believe that's correct. It might be 0.09, but I'm pretty sure it's somewhere between there. So this kind of goes back to the thing where as long as you're in an asset that supply is increasing or that is increasing less than inflation, it's really not a problem. We're increasing, like Ethereum supply increases less than the rate of fiat currency inflation, then you're fine. You're not losing any value there. And over time, as more and more people adopt Ethereum, it's going to go deflationary. So Bitcoin can't do that. Bitcoin can't. There's 21 million Bitcoin, and I've heard talk of, as quantum computers come out, that there actually might be a lot of supply exposed because it'll be able to crack these old wallets in Bitcoin, and all that supply is just unlocked. So it's not really a concern to me. Not a whole lot. I feel like I kind of I babbled there a little bit. I don't know if I answered your question or not.
No, you nailed it. So do you think there's a point where you need to, I guess, stay in your own lane and I'm not saying that you do this, but I see tribalism amongst communities in general, but not antagonize I'm watching Tolly recently tweet a lot about Ethereum, and I almost want to just, well, I did say it on one post. I just want to say, like, hey, dude, just focus on your own ecosystem. It's posting quite negatively about Ethereum from what I've seen. And I find it kind of ironic because, you know, when Solana was at its lowest point in December of 2022, I remember Vitalik putting out a positive message about Sol and how you know, they're going to be fine and they're going to come back from this. And I don't find the tribalism to be very constructive. You made a post, and by the way, I'm not saying, you just made a post about other chains that have had downtime, and one of them has Bitcoin at like a total of 108 hours of downtime. I wasn't able to verify that, and I know you didn't make this post, but how important is it to kind of, I guess, as I could see a Bitcoiner seeing this and just being like, fuck you, that's not true. It hasn't been 108 hours and 8 minutes. How important is it, especially as you grow more and you kind of become a bigger spokesperson for Ethereum? How important is it to not antagonize or maybe post false information about other ecosystems?
So I give me a few minutes, I could actually pull up where I found that. It was actually
I got you.
My friend had pulled the statistics on Bitcoin, and what he had done was he actually looked back in the block history, and so that chart I made that.
Okay, you did.
And so we went back and we looked at the actual block times, and what it was that, if I'm going off memory, I want to say it was that after a certain period of time where Bitcoin hadn't proposed a block, and that's how we calculated it up. And there were some really long ones that I want to say, like hours, that in the early days that Bitcoin just didn't produce any blocks. But nobody really talks about that. The Solana ones, I mean, those are pretty well known. I want to say their longest outage was something like 18 hours.
Yeah.
So it's like, it's just unacceptable for financial infrastructure. And they say, well, we haven't done it in 18 months. It's like, yeah, it's okay. That's not very long. That's only a little over a year, you know?
There was this issue with Sol, and I know it wasn't technically an outage, but when the Melania token launched, so many people, the majority of people that I knew, couldn't get their transactions to go through. And I think that one of the explanations from a dev there was that, you know, the RPC node just wasn't accepting my transaction. And I didn't really understand why or what that meant, because I'm not a super technical guy. But that's not the point. The point is that the average user is interfacing with the blockchain, and the blockchain is supposed to be consistent, and we expect it to be up 24/7. And I wasn't able to move or do anything with funds. And I could see that being a nightmare in a black swan event where markets are nosediving, and, you know, maybe I have assets on Sol that I want to sell, right? I don't believe that we're going to keep going up. I think a bear market's coming, and as prices are cratering, I'm not able to sell my assets. And you know, an hour of not being able to do that might cost me millions of dollars. I lost my train of thought there.
No worries.
But why is that something that Solana can't solve, or?
You know, I mean, I haven't really looked at Solana's code specifically, and I'm not really a coder, so I can't really say what the bug is. But the fact that they've had so many bugs that cause so many outages, it doesn't, and it's not as if they had one bug. It's like a series of bugs that have attributed to all of this network outage that we've seen. I mean, I know one of the fixes, but I don't want to say it because I'm not going to help a competitor chain. There's something they could do that would greatly improve it, but they're not doing it. It's a really big deal, you know, because, like, especially if you're a company like Fidelity and let's say that you're tokenizing stocks, and like you said, with a black swan event, let's say that you have a lot of customer funds over here on Ethereum and it continues to trade, no issues, no downtime. You have a black swan event, which is the most likely scenario that would trigger a network outage, and you have stocks and customer funds on Solana, and suddenly that network goes down. Now your customer has taken a total loss on their position because they couldn't get out. I mean, these financial institutions have a fiduciary duty to their clients, and putting it on infrastructure that goes down like that, it's just not a risk that I think that they're willing to take.
Yeah, no, I totally agree. And I think the aha moment for me was really, it was really having, and this is what I'm saying, like it's having someone from Wall Street, having a suit kind of reaffirm your beliefs. Ethereum's zero downtime since inception. People want to talk about the DAO hack and how that technically was. That's the other thing. I in my research, because after I saw your post, I went and looked into Bitcoin, and I disagree. I don't think that. I think the 108 hours is wrong, but that's we can debate that another time. But I found that the definition of downtime is actually more nuanced than I originally anticipated. It's a nuanced definition, and so people like to say that, well, because of the hard fork and because blocks didn't stop producing, but the chain was out of sync, that Ethereum also had some downtime. But let's say, for the sake of the argument, like, sure, but since then there's been nothing, right? There's really virtually been nothing, and to me that's critical. If an L2 like Base has downtime, then that's on them, right? Right. It's as long as the L1 is moving, and I would imagine that a lot of big money doesn't really mind the lagginess. Like if I'm going to leave my entire net worth, like if I'm a 100 millionaire and I believe in decentralization and I believe in blockchain and I want to leave my money on Ethereum, I wouldn't do it on L2 personally. I don't care about the cheaper fees. I'm already rich. I would rather have the decentralized layer one. And I think that there's power in that. And I've always thought there was power in that. And I think that I was having a hard time seeing how L2s would compete with high throughput L1 like Sol or like Sui, but that picture is starting to come alive for me. And I think that's really, I don't know, I think it's really exciting.
Yeah, definitely. Yeah, that is a common narrative that I see, that high value assets will be kept on the Ethereum layer one as opposed to the layer twos for that reason.
I mean, that's what I do, right? My long-term stuff is on ETH or on the Bitcoin blockchain. But even my Bitcoin is on ETH, to be honest with you, because I like to borrow against it and do all kinds of stuff with Aave. But okay, this is a chart that has been driving me absolutely insane over the last year, because ever since the merge, so you find it in September of 2022, ever since the merge, Ethereum at its bottom had lost like 80% of its value against Bitcoin. It's coming back up. It's still down about 65% against Bitcoin. And it's been quite frustrating for me, because there have been times where I've looked at my ETH back and it said, holy cow, if I had bought ETH, I wasn't even in crypto back in 2016, but if I had bought ETH in 2016 and just held it, I would have made no sats, right? So with 3.2 million sats per ETH right now, why do you think that Ethereum, despite all of its value, despite having a guy like Tom Lee come and talk about it, doesn't mean that the builders of Ethereum, the believers of Ethereum like you, didn't know because I saw you posting before the ETFs came in, before Tom Lee came in. So people understood its value and people understood its potential, but despite that, it just continued to bleed against Bitcoin. And even then, for ETH to get back to break its previous all-time high, right? Previous cycle all-time high, right? Previous all-time high was actually back in 2017, but for ETH to get back there, it needs to do with like almost a 3x in order to, and Bitcoin needs to stay flat. So, I mean, what are your thoughts on all that?
So to me, the ETH BTC ratio, it pretty much just comes back to global liquidity. A lot of people, some people, I want to make a I guess, a clarification. Some people will refer to the M2 money supply as global liquidity. That's part of it, but it's not all of it. M2 always goes up. Central banks are always printing money and whatnot. Well, excuse, let me rephrase that. M2 always goes up because like people are spending on credit and whatnot. Because if you spend credit, that actually becomes money. So, for example, like if you go out to dinner and you swipe your credit card, that credit, that debt now becomes cash within the system. But so M2 goes up, right? The money supply goes up, but then you have central bank fiscal policy, which has to do with, are they selling things like mortgage-backed securities? Are they sucking liquidity out of the system? What are they doing on interest rates? And so I don't know if you've seen my chart, but there is a chart with a red line that shows global liquidity, and Ethereum and the ETH BTC ratio responds very, very well to global liquidity rising. So as during this whole period, it's been through a tight fiscal policy. So the Fed has had high interest rates because we've been fighting inflation. And now, just as we're starting to get interest rate cuts, we're seeing it starting to reverse. And so this whole thing, I mean, and this goes back even before Ethereum, all the way back to the beginning with Bitcoin. Bitcoin responds to global liquidity as well. That's really all that it comes back to. I think that we saw Bitcoin move higher because of the ETFs and because of Michael Saylor. And then Ethereum didn't really have that at the time. And in combination with high interest rates and liquidity being sucked out of the system, I think Ethereum suffered because of it, but now that is reversing. So, I mean, going forward, I'm really not worried about it. It is, I mean, it's funny because it's almost an exact trend, and it matches Bitcoin's rallies closer than the 4-year halving if you look at the chart of where global liquidity starts to rise versus whenever it's contracting.
So for me, when it comes to ETH or any other crypto asset, the chart that matters the most is in this case, ETH BTC chart. The way that I see it is that if I am invested in crypto as an asset class, I am taking on more risk, or at least that's the thought process, is I'm taking on more risk than I would, I don't know, investing in the S&P 500. And so if I'm taking on more risk, but I still want to be risk averse, then I'm going to be in Bitcoin. And there are a number of reasons why. If I'm holding anything else, I want to outperform Bitcoin. And so when I see people say call for 7K ETH by the end of the year and that being bullish, to me, it's not that bullish. It really isn't, because a 7K ETH, even at these prices, would mean it hasn't even broken its previous cycle's all-time high. I want to see ETH not just break the previous cycle's all-time high, but it's 2017, 2018 all-time high against Bitcoin. Do you think that'll happen this year? And also give me your price prediction for ETH in not just Satoshi values, but in dollar values by the end of 2025.
I don't know. As far as ETH BTC, it's hard to say if this cycle will, I mean, and this kind of goes back to, I don't even know if we're going to have these crypto cycles anymore, to be honest, now that these financial institutions are here. I think that's I think it's possible that goes away. As far as end of the year, I mean, I think, I guess upper bounds, I would say 10,000, but probably more realistically, we'd see somewhere between, I don't know, 6 to 8 maybe. I think that 2026 is where things really start to move. And that's just because of the global liquidity cycle that I was talking about.
Right. So you think that, and every cycle, although I say every cycle as if I've been around forever. I've been around since September of 2017. And so the last cycle and that cycle, there were a lot of people screaming. I call them this time it's different peanut gallery participants, where they're just kind of screaming, this time it's different, this time it's different. A lot of them might not even be holding that much crypto, but and it's not, right? We, especially in 2021, I kept hearing it's different this time because of X, Y, and Z, and it wasn't. We had this. It was almost exactly the same, right? Bitcoin bottomed out in December and January of 2022, the way that it bottomed out in those months in 2018, 2019. It is almost the only thing that was different this time, that's been different this time, is one, we had a Bitcoin break all-time highs before the halving, and that's never happened before. And we also had kind of these mini alt seasons, right? Starting in late 2023 or fall of 2023 through even now. I guess alts have really calmed down now, but dare I say, this time it feels different, although each time we're told it's different, the narrative around why it's different is stronger. Otherwise, people wouldn't, for lack of a better phrase, fall for it. Why do you think that the 4-year cycle is no longer intact? And what makes you bullish in a year that traditionally shouldn't be bullish for Ethereum and crypto assets in general?
So I think about the mechanics as to why the 4-year halving cycle is even relevant. And to me, it comes down to, so like with the first one, the supply is increasing, right? And it goes from 50 Bitcoin per block to 25. Well, what does that actually do? Where's that Bitcoin go, right? Why does it actually go up? And I believe that it's because the sell pressure that the miners cause, because the miners have fixed costs. They have to buy hardware and they have to pay for rent and electricity and whatnot. So the sell pressure of Bitcoin is reduced with every halving. And so every halving, it has less and less of an effect as it goes on. So that's why, like, even over time, the halving doesn't really react that much. Because for example, like, I believe if we're going on the 4-year cycle, we should be topping at like September, October of this year, and that should be over, and we should go into a bear market. It doesn't really feel like that. We haven't had any euphoria. We haven't had anything like that. Is there a way for me to share a chart?
Yeah, of course. You can just, do you see where it says present? Or are you not able to do that?
Where is that on the? Oh, I see. Present. There we go.
Yeah. You hit that check box or that plus on the screen, and then it'll let you share a specific window or a specific tab.
Okay.
And let me know if you're having issues. You can always send it to me and I can share it myself.
Yeah, it's just my Mac is trying to ask me for permission.
Yeah.
Let's see. Oh my God, so many pop-ups. It's not letting me. Let me do this. Let me
Just
take
send it to me. Just on Telegram.
Oh, that'll work.
Yeah. On Telegram or Twitter, whatever works.
See if that works.
All right.
It was wanting me to close my internet browser to be able to give it permission.
No worries, man. All right, let's do it. Bam.
Is there a way for? Can you zoom out a bit so we can see the whole thing? There you go. And then, I guess, yeah, there we go. That's better. So this is showing you the ETH BTC ratio. Oh, wait, I didn't show. Why is the? That's weird. The global liquidity isn't showing up there for some reason. That's bizarre. Let me try sending you an image, maybe. See how that works. Not sure why the red line doesn't show up. Let's see if that works.
All right, 1 second. How's that?
Is it
still not sharing?
I don't see the picture. I sent a picture on Telegram, not a link.
Oh, I got you. Oh, there it is. Sorry.
No worries.
This. Still getting used to StreamYard. Okay. All right, almost there. How about that? Bam.
Yeah, perfect. So the red line here, this is tracking global liquidity. So this is tracking M2 money supply, and it's tracking the central bank interest rates. So like the United States Fed, for example. And what you'll notice here in the blue line is the 100 period DEMA. And so what you're noticing is that as soon as global liquidity starts to rise, that's whenever we enter into the bull runs. And you can see this trend a lot more on Bitcoin. But as soon as we crossed right now, where global liquidity starts rising again, look what the ETH BTC ratio is doing. It's starting to reverse. And so the reason that I don't think that this bull market has ended and why the 4-year cycle is broken is because prior to the inflation that we had, that the Fed had to raise interest rates to fight it, to get rid of it, the global liquidity cycle was pretty much in sync with the 4-year halving cycle. And so now this has been stretched out because they had to keep interest rates high for so long. And now that global liquidity is just starting to rise, I believe that this is where the real bull market starts.
What makes you think it's rising versus just kind of consolidating as it has been over the last few years?
Just that it's broken above the 100 period DEMA, and it's also that the Fed is starting to cut interest rates, and so I expect them to continue to do that. Whereas previously they weren't really. They were still saying, we got to fight, higher for longer. We got to keep interest rates higher for longer to fight this inflation type of narrative, but they're not doing that anymore. So it's the chart, but it's also the fact that the Fed is actually cutting.
Do you think we'll eventually see a bubble pop?
That's tricky. I mean, it depends how euphoric things get. I think that with Ethereum, a lot of this is going to depend on how fast they tokenize real world assets, how fast they tokenize stablecoins. I mean, if we wake up tomorrow and there's 5 trillion worth of stablecoins and RWAs on Ethereum, well, the value is going to go up exponentially.
Certainly.
So I think it really depends on Wall Street and how fast they build their systems out at this point.
And how fast, because traditionally I find these things move slowly. How fast do you think that Wall Street, how fast do you think that Starbucks and Amazon and McDonald's, JP Morgan, Robinhood are going to actually move on chain?
I think they're going to move very quickly. I think within the next 5 years, I think people are going to be shocked how different the world is.
5 years. It's a long time in crypto.
Well, but I mean, I'm talking like more than 10 trillion in
Sure.
RWAs and stuff. Like I think within 5 years we'll be like 50% onboarded as far as our financial system goes. Because so for example, like the Fed was, or excuse me, not the Fed, Treasury Secretary Scott Bessent said that he expects, I believe it was 3.7 trillion, or maybe it was 2 trillion. I forget. There's a couple of different ones that put out predictions that by 2030, that's how many stable coins that they're projecting would be out there. But that's just for the US dollar. That doesn't include all the other countries in the world, and they aren't just going to sit by and not adopt stable coins themselves. They have to remain competitive. They have to upgrade their infrastructure as well. So, it's really going to depend on just how fast they onboard. But I think if you look at the adoption of technologies, there's a chart that talks about it. And like the internet and the iPhone were adopted a lot faster than the steam engine type of thing. And so I think that because the internet is around and communication is so fast, I think adoption is going to go a lot faster, especially now that we have like the Genius Act and Clarity Act being passed. These financial institutions have the green light, they don't have to stress about being sued for $100 billion or whatever they would be sued for by doing something illegal. Now they have the clarity, so to speak, to go ahead and start onboarding. And this goes back to the layer 2 thing, where as soon as a product is built, you're just onboarding people. As soon as JP Morgan launches a stablecoin and in your checking account, you see checking account, stablecoin wallet. That's when real adoption just starts going vertical, because they already have an 80 million customer base. So, I mean, this is going to be, in my opinion, adoption like we've never seen before, as long as they actually start to adopt, which I believe they will.
Yeah. I mean, so do some of these companies that are starting to buy up a lot of Ethereum. Were you surprised by that? Were you surprised to see all these companies start to build out ETH treasuries?
I was surprised by how many were coming out. I expected, I was thinking like, I wasn't surprised by seeing a couple, but it seems like every other day now there's another ETH treasury launching, and it's kind of crazy. Yeah, this is incredible.
Do you think something could go wrong? I asked this question to myself in regard to Bitcoin as well. I think eventually a bear market will come. Maybe not the same bear markets of the past, but a bear market, right? That's how cycles work, and that's
right.
How markets work, at least in my experience. But
right, yeah, of course.
If you were to do a diagnosis, on what went wrong, I believe that most roads would point towards these companies that are buying up Bitcoin and ETH, and maybe the way that they're buying it, maybe they're taking on too much leverage, maybe the company actually isn't worth anything, and so the stock that's trading at multiples of ETH dumps, and they need to sell ETH to cover their assets. I don't know. What are your thoughts on that?
My only real concern would be is if they used leverage, because if they use leverage to acquire an asset and that asset goes down, now you're facing liquidation, margin calls, and whatnot. That's historically how pretty much every financial crisis ends up happening, is that these financial institutions end up getting way over leveraged, and they end up getting margin called, and assets start selling off, which triggers this cascade effect across the entire market. That would be my only concern. So hopefully these treasury companies don't decide to take out loans on their holdings in an irresponsible way. But I don't think that it would be anything catastrophic. Markets always go through these periods where you have people that get over leveraged and they get liquidated. That's just what happens. But it's nothing that would be like a death blow to Ethereum.
I got you. I agree, by the way. I think it might slow us down. Same with Bitcoin, right?
Yeah.
Bitcoin could crash another 60% at some point, but when in doubt, zoom out. And it's probably cheesy at this point, but it's true.
Right.
The trajectory of these assets has been up over long periods of time. Do you think, I want to circle back really quick. So you said by the end of the year, somewhere between 7 to 10K. Do you think that Tom Lee is crazy for saying that Ethereum at 300K, or is he one ETH is going to 300K, or do you think that his time horizon is just much longer than most people in crypto?
I don't think he's talking about this cycle.
Right.
I think he's talking about market maturity, and he's not the only one. I don't know if you've read the report Etherealize put out a report, the bull case. You can find it on ethdigitaloil.com, and I was actually one of the contributors to it. But what we did was we compared ETH at maturity to other assets, like compared it against gold, the bond market, the global M2 money supply, GDP, for example. I want to say it's somewhere around $100 trillion. But for reference, as everything gets tokenized, you're talking about $100 trillion worth of GDP being processed through Ethereum. So I believe the lowest comparable market cap on there was gold, which was like 20 trillion. So at a $330,000 price, you're talking about a $40 trillion market cap for Ethereum. And that kind of just puts it in the middle of the road of all these comparable assets. So it's really not that crazy. If you want to get to the high end, the crazy end, that's like 100 trillion, which is like where the biggest ones were for comparables. And then on the low end, it was like gold, which was 20 trillion, which still puts Ethereum at like 160,000 or something like that.
Are you ever, if things get too frothy, are you ever going to sell your ETH, or are you just a long-term holder?
I think I'm just going to keep it in my validator. Yeah, okay. I'm not going to try to play with the swings.
Okay, so that leads me to my next question. What percentage of your portfolio, overall portfolio, not just crypto, is allocated towards Ethereum?
I have about 20% in Ethereum.
20%, interesting. I always thought it would be so much higher.
No. Yeah, no, I have stocks and other things. So I sit right around 20 right now.
I see. And what percentage of your crypto portfolio is that?
Oh, that's all of it. I don't have anything else.
All of it.
Yeah.
No L2 tokens, no app tokens.
I mean, I probably do, but it's dust. It's not anything of significance.
I got you. And you run your own validator.
Yeah.
So no leveraging, no borrowing against, no liquid staking, nothing.
Nope. Keep it simple. Just run my
How easy is it to run your own validator?
It's really easy, to be honest. I'm really paranoid when it comes to DeFi and all this stuff, because there are things that I just don't understand. You know, it's not the things that I know that I got to worry about. It's the things that I don't know. And so I try to keep things real basic. And so setting it up was really stressful. I didn't want to like send money to a wrong address or something like that, or get a letter wrong or something. But once it was set up, it's really easy. Let's see, I think the hardest thing that I had to deal with was like a power outage from a hurricane, which sucked. But I mean, other than that, it's easy. You know, you just do the updates every so often, and you're fine.
So what happens if there is a power outage and your validator goes down? Do you lose any Ethereum? Are you penalized for it?
Yeah, so you're penalized the amount that you would have earned. So if you're earning $1 a day, for every day that you're down, you lose $1.
Okay, so it's more of an opportunity cost versus your actual bag being.
No, they actually deduct it. So.
Oh, I got it. Yeah. I got it. Okay.
Yeah,
I got it.
So it takes like basically twice as, like if you're down for a day to get back to even, it takes 2 days.
Interesting. And have you thought about setting up a generator in the future so that you don't have to deal with that? Or have you set up a generator?
Actually, yeah, I just I helped get it's called a transfer switch, which you send over power from the generator to the main, like the house's electricity. So that just got installed, actually.
I would love to set one up. I haven't tried it yet, but it's something that I think is important and would like to do. And there are really no costs, right? The costs are minimal for setting up a validator.
Oh, I think I spent like $1,500 in hardware to build it, because I wanted to build one that would last a long time. That's about it. Other than the ETH, that's really all.
What do you think about proof of stake and the fact that there aren't really much costs, and you can be an Ethereum whale running your own validator, and you keep making ETH and you keep restaking it? versus Bitcoin, where there are rental costs, there are electricity costs, there are hardware costs, and those miners need to eventually sell Bitcoin, dump Bitcoin in the market in order to pay for business expenses. I almost want to say I see that as better in a way, because it isn't concentrating Bitcoin, although Bitcoin is quite concentrated if you zoom out amongst a few hands, but it doesn't concentrate Bitcoin more, right? It creates more free supply for people to come and buy. Do you think there are any cons to the proof of stake consensus mechanism, where it not encourages hoarding, but it makes hoarding inevitable?
I mean, I think it's a better system than proof of work, in my opinion. I think that wealth always gets hoarded because the people that manage wealth responsibly will end up collecting more of it, as opposed to if you waste money and whatnot. So I think that just historically, wealth is always going to concentrate. That's just how it goes. And then you have these redistributions from market crashes and whatnot. But I don't really think it's a concern, really. Yeah, I think that it's more beneficial because people don't sell. Like, you have the miners that have to sell to pay for these fixed costs, but you don't really have that on Ethereum. So to me, it's advantageous to people holding Ethereum as opposed to being a downside.
A question from the audience: why do you think that Ethereum's price is not pumping despite the ETFs and despite ETH being no longer labeled a security, despite ETH and with all the bullish news around ETH? I'm trying to paraphrase. With all the bullish news around ETH and companies allocating the treasuries, shouldn't we have by now seen ETH break its previous dollar all-time high?
So again, I think that again comes back to global liquidity. Bitcoin kind of broke away from that because there was so much spot ETF hype and Michael Saylor, and we're just now seeing that turn around with Ethereum, where we're getting our own treasury companies coming in buying. We're getting interest rate cuts, which means global liquidity starts rising. It all comes back to global liquidity to me, because Ethereum is a giant economy. It's a giant digital economy, essentially. And when interest rates are high, it's really hard for businesses to grow, because businesses grow based on leverage. They borrow credit, lines of credit, and whatnot. And so when you look at it from, I guess, that point of view where Ethereum is an economy and you're in an environment where fiscal policy it's hard for businesses to grow. I think that's why Ethereum gets affected by it more. But now that global liquidity rises, or is rising, I think that's not really going to be so much of an issue anymore. And also, people forget Ethereum was heavily attacked by Gary Gensler and the prior SEC. So Bitcoin really didn't have that the way that Ethereum did. And now that these regulatory uncertainties have been kind of pushed aside, I think that they are going to push adoption really, really hard. And this is something people miss. Like, this is the first pro crypto president, first time that we've ever had legislation that directly benefits Ethereum, of all these companies now having the green light to start building. And I think they're going to take advantage of that. And I think they are really going to push adoption the next 4 years, because they've never had that before. It's always been, bad crypto, bad Ethereum. And now we need to get this thing as embedded in the system as possible so they can't take it away.
I love it. I couldn't agree more. What do you think those holding ETH should pay attention to going into the next 6 months?
I would just pay attention to how fast these institutions start to tokenize RWAs and stablecoins. I think that's going to be the real big driver for ETH's value. So pay attention to that really closely. Actually, what's interesting is if you look at Token Terminal has a really good chart that shows the Ethereum market cap has always stayed above the Ethereum ecosystem TVL. So, and I want to say at the peak, I want to say it was 2.5 to, no, it was 2.8 to 3.5 times the TVL in prior bull runs. So if we tokenize 3.3 trillion, that gets us to an $80,000 Ethereum, if that ratio holds true, which isn't a lot when you think about it.
Sounds like a lot.
Yeah. Yeah.
I think a lot of people probably dumped their bags along the way, just like a lot of people, sold Bitcoin when they bought it at $10 and it got to $600.
Right.
Well, yep. 80K, when, if you had to estimate, when would you say we reach 80K?
So the charting that I had done,
yeah,
I think the earliest we could see it is like January of 2027, December of 2026. That's if, and again, I have a range. It's anywhere from like 30,000 to 80, and it all depends how fast they tokenize assets. And I think that's what people don't get. Like, people look at that number and they're like, "Oh, that's crazy, Leo." And I'm like, "Yeah, I get it, but you got to realize there's no adoption right now, and the biggest financial institutions finally have the green light." So it's a question of, like, for example, if it's hard for people to imagine how it could just go up in value that fast. But what if it just launched as an ICO and it had no value per se, right? Because it's not trading, and it just gets launched and it already has like 5 or 10 trillion worth of RWAs and stablecoins. What would it be valued at? Right now, it doesn't have anywhere near that. It's got like, I want to say it's like 250 billion. So I think that it's a case of just how fast they actually tokenize assets.
I agree with that, and I feel like just legacy systems and legacy folks are typically so much slower. I hope they don't take too long, but I guess with them, they need to check a lot of boxes, and there's compliance that needs to be adhered to, and there's a lot of red tape that I'm not privy to.
Right.
But an $80,000 Ethereum, I think, would be it'd be face melting. It's one of those things where Bitcoin in 2017, it went to 5 and 6 and 7 and 19.5K. I don't think anyone predicted that, at least in my circle in 2017. And so
certainly surprised people.
It would be cool to see Ethereum have that moment.
It certainly would.
Leo, it's been a pleasure chatting with you. I love the bull posting that you do, and I love that so much of it is evidence-based and numbers-based. And you have a thesis to back your claim. Is there anything else you want to share with us today before we wrap things up?
Yes, sell a tooth and buy Ethereum.
Sell a tooth and buy Ethereum.
Pulling for Michael Saylor's book there.
Yeah. I sometimes wonder if the powers that be are suppressing the price so that they can buy more. That wouldn't be the first time that's happened in markets, in my opinion.
Yeah. I forget who was. I want to say it was George Soros it might have been him. There was a trader that cornered a market he was basically going on TV and trashing it. I want to say it was Copper. Huh? It was
in Soros, and I think it was in the UK or something like that.
Yeah. So I mean, whenever you see a ton of FUD around something and it just doesn't quite make sense, it's like, oh, it's because they want to buy a lot of it and they want to keep the price down. And so that's kind of what we've seen, all the way up until regulation was passed.
I just thought of Bill Ackman going on TV during COVID and basically say, I don't know, just speaking with a very bearish tone, and I would have to go and see verbatim what he said, but it shook the markets, and then the markets had a face melting rally. So I'm excited for ETH. I've been waiting for ETH to have its moment, and I've been holding for years. So it's cool to get you on this interview and just talk about the direction it's heading in. And I always love speaking to people that are just dedicating themselves to one asset because they're so convicted and they have such a strong thesis. So yeah, keep at it, man. We appreciate you. And anytime you want to come back on here and chat Ethereum, you're more than welcome.
Thanks, man. Thanks for having me.
Take care, Leo.